broadly, what does it mean for the GCC fiscal outlook?
Morning, Anne. I think the link between oil prices and the GCC fiscal outlook remains pretty robust. So higher oil prices obviously mean higher oil revenues for the GCC countries. Every $10 rise in oil prices, more or less, means another 1% to 1.5% of GDP in extra oil revenues for the GCC countries. That doesn't sound like a lot, but as a whole, we're talking something like 20 to 30 billion US dollars for every $10 rise in terms of oil revenues gained. So it has a significant impact.
And I wanted to discuss Saudi Arabia specifically. How do you think Saudi Arabia's oil output cuts, which are now extended to September, are going to impact and cost the economy? What's the GS view?
Well, there's certainly a cost in terms of lower production because the Saudis are obviously selling less oil than they would otherwise. And we calculate that cost to be around 0.4% of GDP. So the 3 months per month, sorry. So for the 3 months between July and September, it's going to cost them about 1.2% of GDP. That said, given that these cuts are helping to support higher oil prices, the actual net benefit to the budget is significant. And we think that they ultimately will end up in the black as a result of having taken these cuts.